It's Wednesday, November 28th. Welcome to Market Foolery. I'm Chris Hale. Joining me in studio today from MFAM Funds, Bill Barker. Happy Wednesday.
Thank you.
Thanks for being here.
Thanks for having me.
We've got some earnings.
Yes.
And when I say we've got some earnings, let's face it, not everyone's earning money, as we'll see from the actual stocks.
Some earnings are better than others.
Some are better than others. Let's start with Tiffany and help me to understand this, because third quarter revenue for Tiffany was light. The same-store sales were lower than expected. I wasn't expecting that Tiffany, in terms of the stock, would have its worst day in nearly 4 years. This wasn't a good report, but is it really as bad as? Is it really? Wow, this is the worst day in nearly 4 years. Bad?
No, it's not that bad. But the reason for the weakness in the top line specifically was China, and if the Chinese sales, whether it's tourists coming here or selling in China, if the Tiffany brand is not resonating either because of a perspective on the United States currently by Chinese consumers or something else, that is a big chunk of where you want your growth to be coming from in future years. And so when you I don't know if you start subtracting that from your growth equations or whether you just say this is a blip caused by current politics or what. But I think that's the question the market is asking by selling the stock off today.
And this was not, as we've seen in some cases, this was not a situation where Tiffany shares had been run up to some enormous degree. So I'm wondering, when you look at the stock now, do you see it as a value play? Is this a cheap stock right now? Which always seems odd to say whenever you're talking about a company that's known for selling diamonds.
Yeah, I don't know that I would call it a cheap stock right now. And then again, there are a lot of companies that I would say, even after a significant decline, are not cheap. But at 22 times earnings, no, not really. It's not got the sort of growth story that would make me especially interested in it at that price, especially if you've got questions about how things are going to play out with China over, maybe not over the long term so much, but I think I don't have any good read on what's going to happen there over the next couple of years.
Also falling today, shares of JM Smucker, the consumer brand giant. Second quarter profits came in lower than expected. They cut guidance. This, unlike Tiffany, where you could sort of look at Tiffany and say, well, they didn't do as well as they wanted to. Smucker's quarter was kind of bad all over. Yeah,
it's in, a number of, I guess when you take the toppest of the top lines, which was only up, I think, a couple percent. For the quarter, and net sales were up 5%. So that's okay. That's about keeping pace with a little bit better than inflation, of course. But one of the reasons that it was up 5% at all was because of an acquisition. So they got Ainsworth, which is a pet food company, a sort of gourmet pet food line, and they sold off the Pillsbury baked goods, and we've gone over the Pillsbury exists in a couple of different actual companies, and there's the baked goods part that Smucker's wound up with, but they sold that off. So a couple different things there. The top line's a little bit misleading. Really, bigger problem for them is the margins came down. They're finding that there is a lot of competitive pricing in coffee, which is good for some of us, the drinkers of coffee. Always happy to hear that people are competing on price there. They still have surprisingly, the number one coffee brand in America, Folgers.
Yeah. Still number one.
Still number one. They've also got Dunkin' Donuts, the beans that you buy off the shelf, not the coffee that you're buying in Dunks, and Cafe Bustelo and a couple of other coffee brands. So they're really, at this point, much more of a coffee and pet food company than jams and peanut butters, which is what you associate the name with more.
So I'm wondering if, when looking at a stock which is where it was 5 years ago, I mean, long-term shareholders of Smucker's have not really been rewarded at all. And you look at all of the brands they have, I'm wondering if they need to start taking a very serious look at selling off more of their brands. I went to their website, and one of the first things you see on their website is, hey, we're hiring. So not that I was looking to take a job at the Smucker Corporation.
You weren't looking for one, but hey.
I thought, hey, I'll click on that. And just to see, they've got over 200 jobs listed. I get that it's a big company, but I look at the fact that they're doing all this hiring, that the stock hasn't moved anywhere. They have all these brands. It really seems like someone, an activist investor, perhaps needs to come in and give Smucker a fresh set of eyes, because it does not seem like a company that should be hiring hundreds of new people. It looks like a company that should be seriously thinking about getting smaller, strategically smaller.
A lot of openings in the podcast division over there.
None whatsoever.
None.
So yeah,
well, that thing is firing on all cylinders.
Yeah. So I just thought
the Smucker's podcast.
Yeah.
Legendary, daily discussion of Jif peanut butter, and I mean they had to devote like a month to the Pillsbury Doughboy leaving and all that. So,
yeah, sure.
They've got a lot of different things going. They're actually a very, very large player in, I think, the number 7 player in terms of the center aisle, in terms of packaged foods, like store stable things, the things you put in boxes and cans and stuff and just leave there for however many years it takes to move that product. But they do have a direction, and that is coffee and animals, much more so than
jams and jellies,
and even peanut butter, which was a much bigger part of the equation, and is specifically within pets, going more and more high profile, high deluxe sort of stuff. The Nutrish brand, Rachel Ray, is one of their big acquisitions. So that's where a lot of I can tell you. It does cost more and more to feed your pets, and I think they had some interesting details about all of this on a recent investor presentation, and that there are more people, significantly more people, like shopping for their pets than for babies and things like that. There's just a lot of money spent there, and that's where they're going.
Wasn't that the case during the Great Recession, that the only part of consumer spending in the United States that did not drop, that actually went up during the Great Recession, was spending on pets?
Yeah, well, you don't want to punish the pets for, a housing collapse. It's not their fault.
No, they're not. They're not out there with credit default swaps.
No.
Or are they? Because that would be amazing.
That would be one of the great conspiracies of all time, if they pulled that off without our realizing it. So that is, I think, a better place for them to go. And of course, devoting a large chunk of their present and future to coffee makes all the sense in the world, because as the nutritional and health abilities of coffee get more and more publicized,
right,
they're just going to be more and more in the right place with that.
Oh yeah, no, they're absolutely on the right side of history when it comes to coffee. Since Smucker is doing all this hiring, I should also mention that we here at the Motley Fool are doing a lot of hiring as well, and you can check that out at careers.fool.com. We're hiring for here in our office in Northern Virginia, also for our office in Colorado. So just like I spent a few minutes this morning checking out the hiring possibilities at the Smucker Corporation, check out careers.fool.com. Our email address is marketfoolery@fool.com. Just want to say a quick shout out to Carlos, who works at Sheridan's finance group in Sweden. Another listener from Sweden. Thank you for listening, Carlos. Shall we move on to the bloodletting?
Sure.
I shouldn't be so.
Why the shout out to Carlos?
Because he sent an email and wanted to give him a shout out.
Yeah, we're not going to go over the email.
It doesn't
have a question.
There was no question. It was just a very brief, like, hey, listen to the podcast, love it. Thanks for what you do. Thanks for the note.
Thanks for pronouncing a few things right once in a while.
I pronounce.
That's where you got into trouble with one of your Swedish listeners.
Right.
I mean, they were very polite about it, just sort of.
Yeah, very polite.
For next time, here's how you would pronounce that word completely differently.
Right.
Here's
how you pronounce. If you want to pronounce it correctly, maybe this.
I'm not saying you have to.
Maybe go this way.
But, yeah.
I shouldn't be glib about when I say bloodletting, but I was stunned to see what is happening to Chico's stock today, because the third quarter results for Chico's resulted in the stock dropping close to 40% today. They've got at least one executive leaving. Chico's has been public for 25 years. Probably not surprising to anyone that the stock being down 38% this morning represents the biggest single day decline in that time. How bad is this? Because this is now a $550 million company with a 40% drop in one day. I mean, is this a business that now needs to, as they say, consider strategic alternatives?
Yeah. So first of all, for those that don't know Chico's, the full name of it is Chico's FAS. And I would have before today said, for some reason, the name is Chico's FAS. But I went to all the trouble of looking up why that is. And originally it was Chico's Folk Art Specialties, which is the very first store that they had. And after they expanded and franchised, they reduced it to FAS. And they're now much more just doing fashion, which was only a small part of the original store. And so as you mentioned, they've been around for a while. They had a phenomenal growth trajectory in the 90s and aughts, really right up through about 2008 when the growth basically stopped. And now we're looking at contraction. And I talked last week about sort of what, I don't know, sort of the golden equation for retailers is, which is you've got good same-store sales or comps, and then that allows you to build more stores, and so your total sales are growing faster than either your comps are growing or your store square footage is growing. They're both growing, so they combine to give you a top line that's growing hopefully in the double digits. Because you're getting bigger, your margins get better because you have to spread your costs over more, and so your margins get better, and then maybe you've got enough money left over after doing all of that to buy back some shares, and so your earnings per share grow even faster than any of those other things, and it's all great. And that was sort of the Chico's equation when things were going well. And now, so they've got three brands: Chico's, White House Black Market, and Soma, and all of them are seeing same-store sales declines and have seen for every quarter of the last 5, except in the most recent quarter. Soma, which is the smallest element, grew to 2%. Chico's, which is the biggest, has same-store sales were down 10%, and you can't do that for very long. And so that is why the Chico's CEO, that's the Chico's brand CEO, not the Chico's FAS total holding company CEO, but the Chico's brand CEO was shown the door, I would say. And so they believe they've gotten the fashion wrong and they need to do things differently with their fashions.
And on the flip side, Burlington Stores, which once upon a time was Burlington Coat Factory. Burlington Stores is up on their third quarter report. And as you mentioned to me this morning, that stock's done really well over the last few years. And I went back and looked over the last 5
Because you didn't believe me.
I didn't believe you. Over the last 5 years, shares of Burlington Stores, which is a basic retailer that sells, among other things, coats. And I was saying to you right before we started taping, I think the closest Burlington store to where we're sitting right now is up Route 7. It's a few miles from here. I went there a year ago, and
Did you need a coat?
I didn't need a coat. I'll just say that walking into that traditional bricks and mortar retailer, I would not have left that place thinking to myself, boy, this is a well-oiled machine. They are probably crushing it. Quite the opposite. And so the fact that over the last 5 years, shares of Burlington stores have done better than shares of Amazon or shares of Netflix is astonishing to me. What are they doing?
They're doing that equation where the comps, and they're doing it to a degree that allows you to have sort of a 10x on your stock over 5 years. For the most recent quarter, they had comps up, let me get the number right because it's not that impressive, 4.4%. And then you get down to the bottom line and their earnings per share grew 73%. Well, how do you line up those numbers? Because they're adding stores. They're still small enough that they can add stores. They're not saturated. So their total sales were up 13.7%, so almost 10% more than the comp numbers. Margins improved sort of everywhere, and they bought back a few shares. Earnings per share up 73% sounds better than it really is because a lot of that has got to do with reduced taxes. But still, earnings per share were up 73%, and that is a number that is going to drive your stock price higher.
I'm still baffled. I'm still just baffled that this very basic, largely clothing retailer, yes, they sell some home goods and that sort of thing, but Burlington is, I would say, first and foremost, a clothing retailer, and a pretty basic one at that. And the fact that the stock has done this well for 5 years is still mind-blowing to me.
Yeah, I wish I had owned it for the last 5 years because it's quite a surprise. It's really grown the top line at a much slower pace than you would think must be the case for a company that has done as a stock as well as it has. It's got $6.6 billion in last 12 months sales. That's up from $4.4 in the year that ended in February 2014. So they've grown sales less than 50% over that time, but they've grown their earnings a lot more. They were pretty cheap as a stock. They were not really making much the first year. I think they made 13 cents a share, and now they're making $5 a share. $6 a share is the guidance for the coming the rest of the year.
Do you think they want to take some of their cash and buy Chico's?
No. No. It's hard enough to get one retail store right, and you can diversify by getting another brand, as many companies have learned. Look, Burlington is on the right side of, and it's off-price fashion, so it's not as fashion sensitive as a lot of other things because people are they're buying more for the price than just being on track with the fashion. But still, they'll get it wrong at some point, and things won't look as great as they do today because that happens to every fashion retailer sooner or later.
That's true. Yeah, you just reminded me of. Gap. You look at a company like Gap, which has Gap, Old Navy, and Banana Republic, and it seems like clockwork every quarter. At least one of those three is not doing well, and lately it's been the namesake Gap stores that have just been underperforming, and it's Old Navy doing the heavy lifting, sort of making up for Gap's lagging.
Yeah, it's very tough to year after year after year be right on the fashions, and Chico's very much pointed out that their fashion choices, I thought this was at least some small bit of something to hold on to from their report, was they spotted up the mistake that they made with the fashion. Didn't just blame it on market circumstances or anything. Said we overemphasized boho styles, which I don't know. It's not my style particularly. I would say any emphasis is overemphasis there. But
boho?
Yeah.
Buy one, half off? I think that's what that is.
Bold colors and original artisanal prints. So they were wrong on that.
I'm in favor of any business using the word artisanal in any situation. I know it's generally reserved for, bread, but I'm in favor, or just sort of certain types of food. But I would love to see more businesses, particularly ones that have nothing to do with food or restaurants, just start to use the word artisanal.
I came across a place recently, unfortunately it closed, but they were doing artisanal donuts. And that turned out to be a useful application. Sure. Maybe not of the term, but of the concept.
Yeah, no, those generally worked out. But I'm saying I would like to see, maybe some construction companies talk about their artisanal concrete, just to make people do a double take. We should get out of here because we got to do a little prep for apropos of nothing.
Yeah. What are we going to talk about?
Well, those who choose to listen later this week will find out.
Those that came in today hoping to hear you talk about Rudolph and your live tweeting last night of the show and your coverage in the mainstream media today, are you going to promise them a little apropos of nothing about that, or you want to touch on Rudolph before we go?
We could touch on that. Really, thank you to Jay Labont, who tweeted at me right before we started taping today's episode that the Huffington Post, someone at the Huffington Post, did an article about Rudolph the Red-Nosed Reindeer last night. The article entitled "Viewers Noticed Some Very Disturbing Details in Rudolph the Red-Nosed Reindeer," and a bunch of people were tweeting about the show and some common themes, some that I touched on that others did as well, mainly Santa being kind of a jerk, and Comet, the coach of the reindeer games, just being an awful coach and all that sort of thing. And one of the tweets that was featured was one of mine. So that was very nice. So thank you to Jay.
Unfortunately, it was the one that had a typo in it.
It actually had a couple of typos
After
in it.
Really nailing the rest of the show.
Yeah.
That one.
So be it.
Focused on.
But I don't.
And yet you know how to spell.
I know how to spell most of those words, but it didn't show up in that one tweet. Although I don't, and I'm going to do, since I've already spent a few minutes today looking at jobs at the Smucker Corporation, I'm going to spend a few minutes on Twitter just to see if anyone else was pushing the idea that I've had for a couple of years now, which is I really want the Yukon Cornelius origin story. I want it to be live action. It could be a movie, or it could be, because look, Solo, I mean, Disney made a Han Solo origin story movie, and that was fine. They made some money off that. So I feel like a 2-hour gritty. It's
a little gritty.
It's got to be gritty. Well, he's packing a gun.
What's the right mix of comedy and violence that you're suggesting for your first iteration of this?
Only that both need to be there.
I mean, is it sort of an Indiana Jones level, or is it a little bit more hard edged than Indiana Jones?
I think that's sort of the opening. That's the opening bid is, we want it to be like Indiana Jones. And then if someone wants to push the envelope, make it a little grittier, particularly if it's for Netflix. If it's going into movies, into movie theaters, I'm looking for a PG-13 here. If it's going to be,
what if CBS has got it? You pitched it to CBS, didn't you? I mean, through your communications with them on Twitter.
Yeah, they didn't bite.
Not yet.
I don't know that they're. I don't know that they're interested in this.
But it's on CBS. You got to tone down the violence a little bit.
Right. So then it's more of a PG-13. But if
you can get a sort of R-level violence, you're willing. That's what you think Yukon Cornelius really deserves.
I mean, it's rough out there. He's basically by himself. He's got his sled dogs. He's got, his cornmeal, ham hocks, and gunpowder that he's got to buy. He's packing a gun. He's got a knife. I mean, it's a tough world out there. So yeah, it's of course it's going to be violent because his world is violent.
Is he looking for the peppermint mine in this, or is that you getting? I mean, this is a reimagining.
No, I want a reimagining. I don't want. I'm taking the character. I'm taking certain elements of it, but I'm not. No, we're not doing the peppermint mind thing.
Is the snow monster in there?
Of course,
but I mean, he's a little bit more terrifying than he is in Rudolph.
This was one of the things that I tweeted last night, and this is absolutely true. Even though it's claymation, the abominable. If you're a kid, the first time you see this, the abominable snow monster is terrifying.
Yeah.
It's a little bit like Jaws, that you don't see the monster. You see him walking by. You see his feet. You hear his roar, that kind of thing. They keep him off screen for a while. The first time you see that thing as a kid, it's terrifying.
Yeah. So, I mean, in your version, are there more of him? There have to be. Yeah, I mean, that's biology, right? Yeah. I mean, they don't just magically appear from space. There's got to be a mom and a dad, and maybe that's a little bit of the backstory there. It could, some of the bad blood that we see in Rudolph.
It could be, although now you've given at least some of our listeners an idea that the abominable snow monster comes from space, which wouldn't be a bad idea either. It just sort of it's like, all right, like a pod lands and it emerges.
Wow, that's ridiculous. Let's keep this a little bit more realistic.
That's true. Gritty realism.
Yeah.
And it's violent, just like the world that Yukon Cornelius inhabits.
I think we've made people suffer enough.
I think we have.
Until apropos of nothing. Yeah, the suffering will be quintupled.
Yeah, it'll be much worse then. You can read more from Bill Barker and his colleagues. You can read more at their artisanal website, which is mfamfunds.com. Thanks for being here.
Thank you.
As always, people on the program may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against, so don't buy or sell stocks based solely on what you hear. That's going to do it for this edition of Market Foolery. This show is mixed by Dan Boyd. I'm Chris Hill. Thanks for listening. We'll see you tomorrow.